and then we can kind of maybe, if it's okay, take one of the deals you've done and apply it
Sure.
to that, so people can kind of see how this process comes full circle.
Yeah, I think when someone gets into note investing, they don't nobody knows everything, right? So we actually end up having a mix of people in this industry who some people are more the engineer type and they love running, working with spreadsheets and running numbers and analyzing deals. And that's highly valuable. And then you have other people who come from more of the real estate space and understand the actual real estate that is the collateral in note investing. And when we're talking about note investing, we're talking about mortgage note investing, just to clarify. But and so I think and there's certainly other people who come from more of the finance background as well, and there are other. There's not one sort of prototype that necessarily that you have to be to be a successful note investor. Um, but essentially, what you're doing when you're buying notes, it really comes down to three aspects. One is finding a deal. Okay, so you're finding a note, right? You've got to have access to a deal somewhere, right, to be able to buy it. The second piece is finding the capital or the money to buy that note, right? You can't just that is one aspect of note investing that some people misunderstand or misappreciate, underappreciate is can be a little bit capital intensive. You're not going to walk into a bank and say, "Hey, I want to go buy a mortgage note. Can you lend me money to do that?" That's very challenging. I've not actually heard of that. We could go down the whole hypothecation route on when you guys have me back on the third episode. But um,
Just don't make
so
Russ spell it. That's all I'm saying. Please, please, no spelling.
no spelling. We'll leave that to Chat GPT for the show notes. Um, so and then the third piece is managing that asset. And there's obviously sub pieces to this, and it's a lot more complicated than that. But those are the three main pieces: is finding the deal / evaluating the deal, and purchasing it, finding the money to purchase that deal, and then managing that asset or that deal. So those are kind of the three main pieces to uh, buying one particular note. And then if you want to broaden that out for a note fund, it would be that times 10, 20, 30, 40. Is
Perfect.